Hello guys, and welcome to my YouTube channel once again. So in this video I want to show you how to quickly analyze volatility indices so you can make some good profit from it. Alright, so I took a trade on this particular pair, volatility 50 index, and I made some massive profit. So with the same approach is what I'm going to be showing you, and you'll be able to make some good profit if you just follow the instructions in this video. Alright, so the first thing you'll do is to go to a higher time frame. I like going to the daily time frame most of the time to check the direction of the market, and as you can see, the market has been bullish. So let me take over this line. So the market has been bullish for a while now, and you can see previously there was a high here which the market swept. Let me get the arrow line too, so I be able to point to what I'm referring to. All right, so this is the high the market went to previously. This was in the month of August. Then since then the market has never gotten to that high until the month of I think this should be December. Market got to this high again at this point, then started consolidating somehow, and it is based on the structure of the market right now. We think the market is going to be selling based on our understanding of the market and the structure the market is formed, because right now you can see we have something that looks like an impulsive correction, a very long impulsive correction kind of, because the market is creating higher highs and higher lows. On a lower time frame, you will see that very clearly. And if I duplicate this line, you're going to be having something like this that makes it look like a channel. No, this is I think an ascending flag. I don't know what they call it, but this structure you see here signifies the market will be selling to the downside. The market will be breaking out to the downside. All right, so on this time frame, then you can see that after seeing the structure, I had to go down to when I took the trade, actually the market was around this spot. Then the market was somewhere around here at the middle of this, I think so. Then so I went to the 4-hourly time frame. So on the 4-hourly time frame, what I actually saw that really made me enter the trade was, first of all, I noticed there was a zone here that the market swept. Always take note of these zones, guys. Although this one is currently very far away from the price, this is very far from the current price, but you need to always learn to mark these zones, because anytime market gets to that zone, there is definitely going to be some reaction. There's another one here. Take note of these zones. Even if the market has gone beyond them, just take note of them, and then there's another zone here I noticed. All right, there's another trend I noticed within this structure here, and you can see this actually the market was buying from this particular trend line. You can see the market was buying from this trend line, and we also have a zone which the market, if you watch closely, you can see. Always take note of this little information on the chart. You can see this market has been consolidating. After a consolidation, the market usually breaks out, and wherever the market had consolidated previously, each time whenever the market comes back to such places, it reacts. All right, so you can see this is a consolidation. Market was selling for along this place for a couple of days, was buying and selling around here for a couple of days before it finally broke out. After breaking out, see, continued buying and buying. It never got to the main trend line here. This supportive trend line never got to this supportive trend line. So there was a literally another trend created within this trend. All right. So you see, the market finally broke out of this trend, then came back to do a retest. Usually, we would expect the market to retest here to sell, but you see what the market did. Like I've told you in some of my videos, I don't know if I've mentioned to you guys or my students, that once you mark out zones which you expect the market to actually react, but the market skips that zone, no, just look for the next zone. Look for the next zone, because you cannot be 100% in your analysis. You can't be 100%. Most times the market does what is that seems to be unthinkable, all right, so you see the market actually did not react. There was a little retest at this point. You can see there was a little retest here. The market sold down to this level. We had this rally base rally, and then bought massively to do the proper retest. Now in this way we have the proper retest, and then you mark it. You can see this way we have the proper retest on the chart. All right, so now when the market retested this zone, I did not see when this happened, because if I had seen this, this would have been massive profits, guys, because first of all, I can see one of my entries setups here. My students understand this entry setup. I would have entered the trade very early from this place here, and then my stop loss would just be a little above that zone. Then imagine I entered this trade at this point. Let's say I entered the trade at this point. My stop loss would just be about, I think it should be about $10 stop loss, but my take profit would be very down here at this point, about $86 with the minimum lot size. Now the reason why my profit would have been here is because I noticed this they moved the market here. If you go to a lower time frame, you notice the market was actually still going to break out, still going to sell too. The market was actually going to sell too. How did I know that? Now guys, let's look at this. You see, this is the first top the market created. It came down, then went to the second top. Then if you go down to a lower time frame, you will notice, let's go to the 1 hourly time frame. You will notice that the market was actually buying, creating some kind of higher highs and higher lows that indicated that the market was actually going to sell as a kind of a bearish continuation. Look at this, guys. Just watch what I'm doing so you practice it and know how to make you be able to make some good profit. All right, okay, so you see that if I duplicate this and put it right here, then you can see that we have a very nice structure at this point. We have a very nice structure at that point that indicates the market is going to sell. Remember our continuation strategy: sells, higher highs and higher lows, then breakout, continued with the sales. All right, so you can see very nice clearly that the market actually sold from this zone. And on this 1 hourly time frame, you can also see that there's another double top. Let's go down, let's zoom in a bit. There's a kind of a double top here on this same 1 hourly time frame at this point, this zone, but it is not too obvious except you go to a lower time frame like the 15 minutes time frame, guys, like the 15 minutes time frame. So let's go to the 15 minutes time frame and zoom in. Okay, all right, so you can see this looks like a double top. Like this is the first top here, the market sold, came back, created the second top, then it sold massively to the downside. All right, so I was not able to, I didn't find this, I didn't see this when it happened. So I only met the market at let me go to the 4 hourly time frame where I actually met the market. I met the market at this point. I met the market at this point when this particular this bearish 4 hourly candlestick was closing. That's when I met the market. So when I looked and I noticed the market was selling from this zone, and this is a double top, the market will now be targeting the neckline, which is actually this zone right here. Once this happens, the market will be targeting the neckline to either hit there to reverse or to break below it and continue with its sales. So I actually set my stop loss, my take profit around this zone. Then I entered, since I saw the market close there, I knew it was actually going to sell to this zone. So I entered the sell trade immediately at this point. It's on the 4 hourly time frame. So I entered here and each position gave me the result you're seeing on the screen. All right, so that's how I was able to get this particular trade. It's very simple. And right now the market is intending to buy again. The market is intending to buy maybe to where we have this drop set up right here, because the market might want to buy to this zone, then sell nicely and break through this. But two things are possible. If the market breaks through this zone and closes below here, then the sell will continue. But when I went to there, I decided to check the 15 minutes time frame and I noticed something, guys. The market is now buying. I missed this opportunity. You see, there was a consolidation around here on the 15 minutes time frame. There's a consolidation here on this 15 minutes time frame. So on the market, you can see the market was struggling to buy above this zone, but finally it bought above this zone and closed above it. That's why the next candlestick is still bullish. So I think the market might possibly buy to where we have this drop setup right here. The market can just sell to that spot. If the market sells to that spot, sorry, buys to that spot, then you can just take your profit, because I am actually expecting the market to sell. I'm expecting the market to later continue selling. All right, and you know that this sales I'm talking about is not automatic. It will only be possible if the market finally breaks below this where we have this neckline on the 4 hourly time frame. If the market can break this neckline, then close below it nicely, I will then know, then you can expect the market to sell massively towards this trend line here towards this supportive trend line that we marked on the daily time frame, towards this trend line here. That's what's going to happen. Else you can just be watching out for some buys activities till maybe till this drop base drop, then the market will sell. All right, so guys, this is very simple. It's a very simple approach. All you need to do is to look out for a double top, look out for a double top, and look out for a double bottom. Those chart patterns are very important. Learn how to draw, mark the trends. Know how you learn how to mark your trend lines correctly. You go to the higher time frame, look at the structure, go to lower time frame, look for a structure that confirms or that is in line with the structure you found on the higher time frame. Those are the things you do, and you see your analysis will be, at least you cannot say it's perfect. Will be good. You'll be doing some good analysis. All right, because if we say perfect analysis, it means you're supposed to be winning trades. But even with a very good analysis, the market still does what it wants. All right, but if you apply what I've just told you, see, most of the time you will be winning. You'll be winning your trades. All right. For example, you go to see the structure, you go to the 4 hourly time frame, look at the structure there, then make sure the market is always on a zone that is actually ready to give you what you want. Then you see you make some nice profit. Then you can see, like the one we found here, you can still go to the 4 hourly time frame, to 15 minutes time frame, to see the structure there. There's this consolidation, you wait for the market to break out, you join. But if you feel you can't join, you might want to wait for a retest. Then you wait for a retest on the zone, then you can buy, or a bearish candlestick on like trying to sell to that zone that the market just broke out from. Like you see a bearish candlestick coming down to this zone, you can just, after the close of the bearish candlestick, you can enter a trade to buy, then target this zone here, and you make some good profit, guys. All right, so that's just, it's very simple. All right, so stay blessed and see you in my next video. Like this video, share your thoughts in the comment section, and subscribe to this channel. See you in my next video. Stay blessed and peace.